Hey guys, Steve Ferguson here with Thrive Mortgage. Hope you're having a great day. Thanks for watching this video. I really do appreciate it. Today I want to talk to you about things that you can do by refinancing your house. And when I say things, there's all kinds of ways to build equity, to build long-term wealth, and to leverage money that you may not even realize that you have. So let's get started. First of all, if you own a home today, which everybody watching this video most likely does, then you've earned a certain amount of equity in your home depending on where you live. And it can be a lot of equity. It may not be a huge amount, but everybody has some sort of equity in that home unless they just bought it today. And sometimes you buy a home with instant equity. Now that equity is essentially free money. You have equity built into that property. The problem is you can't use it unless you refinance and pull that equity out. You can do that a couple different ways. You can do a first lien refinance where you refinance the entire mortgage. You pull cash out in a lump sum, and then you can leverage that cash to do whatever you'd like. Or you can do a second lien, like a line of credit, or just a second lien by itself. Leave your first lien alone, and then the second lien is something you can do, whatever you'd like to, and pull the cash out of the property using the second lien. Now, you guys are all in the state of Texas, which is awesome. So Texas has a rule that you can't pull more than 80% of the value of your home out in the form of an equity loan. So if your home is worth $100,000, then the max loan amount you could have is $80,000. So the easy way for you guys to do quick math to see what's available to you is you take what you think your home is worth. Let's just say $500,000, multiply that number times 0.8 because we're trying to get to 80%. And in this case, that would equal $400,000. Then you would subtract whatever you owe. Let's just assume you owe $200,000. That means you have $200,000 left over that you can use to leverage and earn more money. So let's talk about what you could do with that equity. If you have kids in college, you could pull money out of the property to pay for college debt. If you want to start building an investment portfolio, you can take money out of your equity position and use that money for your down payment or even to pay off the entire thing for investment properties. Therefore, somebody else is paying your mortgage for you, somebody else is paying your college tuition, etc. That's a way to generate really long-term wealth. You could leverage that equity to pay off short-term debt. So if you have car payments that are really large or credit card debt, etc., all of that money could be used to offset that debt and pay it off. It's gone. I've had clients recently where I've saved them over $1,500 a month by taking the equity from their home and paying off all of their short-term debt that they have, and now they only have a mortgage payment. That's beautiful, right? Saves you a ton of money. That's like having a second job. So the important thing I want you guys to consider is there's lots of options you have with that money position or that equity position that you have in your home. You're not limited by what you can do with it. So if you wanted to buy an RV, if you wanted to buy cars, if you wanted to pay off debt, if you wanted to send kids to school, if you wanted to buy a second home, investment property, the list goes on and on. You can do that with the equity you have in your home right now. Now, what I recommend that you do is you have a conversation. I recommend you give me a call, reach out. Let's go over what your equity position number looks like and whether or not it makes sense to pull the equity out. So there's some numbers that we can run. There's some details that we can put together to make sure that we're delivering a product that makes sense for you and your family. Don't get caught up in these interest rates. I know a lot of you guys are at these really super low rates, but the value of that money can far exceed the benefit of the low interest rate. And that person I just sold for, refinance onto recently that we just closed, saving $1,500 a month. They went from that rate that was in the 2s and 3s up to market rates today. But the benefit of that $1,500 a month was so substantial, it far outweighed any difference in the mortgage payment. And by the way, now that they paid off all their debt, they can take that money they're saving every month and pump it right back into principal and pay their house off in about 11 years. So they're way ahead of where they were before by doing the refinance. So guys, let's talk. Reach out to me, give me a call, send me a text message. If you're watching this video, my contact information is below in the video information screen. Subscribe and like to my channel. There's a lot of great videos for you guys to watch. I look forward to speaking with you soon. Have a great day. Bye-bye.